the system that helps to prevent the same income from being taxed twice, which is the first ones in the country where the income is earned and again in the taxpayer's home country. This is especially important for individuals or companies involved in international trade or cross-border work. So in Malaysia, this concept is governed by the Income Tax Act 1967 under Section 132, which covers bilateral relief. These apply when Malaysia has a double tax agreement DTA with another country, and Section 133, which cover unilateral relief. This applies when there is no DTA but Malaysia still allow relief for foreign tax paid. The relevance of double tax relief today is when the globalization and the rise of remote work, it's increasingly common for employees and businesses to earn income across border. For example, a Malaysian software engineer working remotely for a company in Australia could be taxed in both countries unless double tax relief is available. Another key point is global mobility. People are moving between countries for work, study, or investment. DTR ensures they don't get unfairly taxed on the same income more than once. It also supports foreign investment. Companies expanding into other markets can avoid double taxation on profits they bring home, encouraging more international trade.
Hi, so today we'll be exploring the significance of double tax relief and why it matters to individuals, businesses, and the nation as a whole. So to start off, first, double tax relief protects against double taxation. This means that, or ensures that, Malaysian residents are not taxed twice on the same income earned abroad. This also promotes fairness and ensures that tax equity for global earners. Second is that it encourages cross-border trade and investment. So by reducing tax barriers, double tax relief promotes economic activities between countries, benefiting both individuals and businesses. Third, double tax relief supports Malaysian companies to grow globally. So this basically means that companies can claim relief on foreign income, which lowers their tax expenses and helps them stay competitive in the international market. Lastly, our double tax relief keeps Malaysia competitive in Asian countries and beyond. So this shows Malaysia's commitment to international tax cooperation and attracts foreign investors and multinational corporations. So in summary, double tax relief is a crucial tool for promoting tax fairness, boosting global trade, supporting business growth, and strengthening Malaysia's global competitiveness. Thanks for watching. I'll pass it off to the next presenter.
In Malaysia, double tax relief plays an important role for three main stakeholders: businesses, the government, and taxpayers. Firstly, businesses benefit from double tax relief helps them avoid paying tax twice on the same income earned overseas. For example, Malaysian companies like AirAsia or Top Glove that operate in multiple countries can save on tax costs. This encourages them to expand internationally, improve their cash flow, and keeps them competitive in the global market. Secondly, the government plays a key role through agencies like LHDN or IRB, which are responsible for negotiating double taxation agreements. These agreements help Malaysia build strong tax relationships with other countries. It also shows that our country supports fair tax practices, which makes Malaysia more attractive to foreign investors and supports our trade policies. Lastly, taxpayers, especially Malaysians working overseas, like professionals in Singapore or the Middle East, benefit because double tax relief protects them from being taxed both abroad and at home. This ensures fairness, reduces financial stress, and provides clear tax rules for income earned internationally. Overall, double tax relief helps Malaysia grow, keeps our tax system fair, and supports our economy in a globalized world.
Next is ongoing challenges or controversies associated with double tax relief. First is conflict between Malaysia's domestic tax law and double taxation agreements regarding the definition of royalty. When Malaysia has a DTA with another country, that DTA should override domestic law where definitions or treatments differ. The problem arises when IRB applies the broader domestic definition from the ITA, while the taxpayer refers to the narrower DTA definition, which often excludes certain payments from being treated as royalty. Second, e-invoice documenting the receipt of foreign income as required by the IRB, which adds an administrative burden, especially for small and medium-sized enterprise. Starting August 2024, it becomes mandatory for large businesses, and by July 2025, it will apply to all taxpayers in Malaysia. If the business earns foreign source income and wants to claim double tax relief, they must issue an e-invoice to show proof of income received. Controversy on implementation of global minimum tax (GMT), where it requires multinational enterprise with global revenues above 700 million euro to pay a minimum tax rate of 15%. If company pay less than 15% in one country, it must pay a top-up tax either in that country or somewhere else. The GMT may reduce the effectiveness of existing tax incentive offered by Malaysia. For example, pioneer tax to attract foreign investment.
My name is Fizatul Ain, and I will explain more about the potential future developments or reform in the double tax relief. Firstly, our country, which is Malaysia, can enhance the permanent establishment in the Double Tax Agreement (DTA). So how can it help on the double tax relief? Let me explain. According to Livia 2024, this agreement is between the two countries to eliminate the double taxation to achieve tax relief. Without a double taxation agreement (DTA), workers and business might have to pay tax on the same income in two different countries, which would increase their expenses. For example, a Malaysian employee who travels to Singapore every day for work would be taxed on their salary by both Malaysia and also Singapore. Thanks to DTA between these two countries, the employee can avoid paying tax twice by claiming tax relief in their home country. This ensures they'll only pay a fair amount of tax. Secondly, a new regulation of e-invoice help facilitate double tax relief. According to Wong 2024, this e-invoice is evidence of expenses in the future for a tax deduction to be claimed. Currently, e-invoice in Malaysia is used for sales invoice to prove income. For example, e-invoice can offer stronger proof of foreign income and help verify earnings digitally. The goal of this initiative is to reduce false claim and speed up the process of tax refund by reducing manual check. In Budget 2025, the Malaysia government introduced new incentives such as the Strategic Investment Tax Credit (SITC). This incentive is aimed at multinational enterprise (MNE) and can help them take advantage of the double tax deduction. Additionally, investment made by MNE or their suppliers in joint ventures with local business will be eligible for tax deduction.
Understanding double tax relief is very important, especially for businesses that earn income from other countries. It helps make sure that income is not taxed twice, once in a foreign country and again in Malaysia. Malaysian government could consider simplifying the application process and offering clearer guidelines and digitize the documentation system. In addition, tax officers could receive more training to handle DTA-related matters consistently, and greater public awareness should be promoted to help taxpayers understand their rights and obligations. It is also important for companies, tax agents, and even students to learn and understand how double tax relief works, as it can help avoid mistakes, save money, and follow the law properly.